Computer. Good morning. It's another week with Michael and Laura sharing all sorts of great tidbits with everybody that will watch this video about mortgages and real estate and just helping you make great decisions when it's your turn to buy or sell. So I'm Laura Fournier with Nations Lending, and I am a branch manager, loan officer, certified mortgage coach, and always helping you walk through the process. And my guest is Michael.
Michael Kurtianik, Macintosh Realtors. Thanks, Laura. I'm a realtor, been doing this for over 20 years. And once again, it's an honor to be with you, Laura, and to talk about all things real estate. Last week, we talked about how a realtor such as myself helps a home buyer during the process, getting them from first contact to settlement and then beyond. So I'm excited, Laura, to talk to you about your side of things. You know, when it comes to the home buying process, it can be pretty high pressure. It can be very stressful for home buyers. And I want to talk today with you, Laura, about, from your perspective as a lender, what it's like to shepherd a person through the home buying process. So first, my first question to you, Laura, this morning is, how do you get a client started in the home buying process?
Well, I love that question because I love to get people started in the process, because their process starts probably with conversations and maybe dreaming about where they'd like to live, you know, why they'd like to live in that particular area. And they kind of get an idea for, you know, a vision in their head about what they want. But then they don't know where to go from that. So they're having conversations with friends and Uncle Joe and, you know, hopefully their significant other, if there is one, but they don't know where to go from there. And they don't really even know what questions to ask. So I love to help, whether it's a first-time home buyer or somebody that's bought a couple times. It's still a new and fresh process because you don't do it very often. A few people maybe buy once. My mother lived in her house for 42 years. I didn't buy and sell very often.
And I'm sure that the documents, it wasn't as much paperwork back then as it is today, huh?
Right. And I've moved on average every 4 to 5 years. So over my adult lifetime. So some people do it a little, and some of us do it way more, maybe more than we should, but it's a good way to purge junk out of your house. Just an side benefit of selling your real estate is getting rid of your junk. So I love to start with getting to know the buyer and getting to know, I need to know all the particulars of their financial situation, but I get to that, but I really want to get to know them. And it's very important for me to know why they're buying. Like, why are they buying now? Maybe why they didn't buy last year, you know. So something's going on in their life that kind of is an impetus, the push to get them to move forward. And perhaps they didn't buy last year or the year before, but they decide to do it now. And I want to know that reason behind it. Could be, that they're getting married. It could be that they're having their third child. It could be they've just always dreamed about a bigger home or owning their first home. It can be anything, and it's different for everybody. But getting to know that why really helps me help them with going through the process, and also keeping them focused on that end goal, because we're going to go over hurdles, and knowing that why helps me keep the focus going forward. And we're going to need that.
That seems really thorough, Laura, and I wouldn't expect anything less from you, Laura, with a first-time home buyer, your thoroughness and stuff. I want to emphasize at this point too that this is a confidential conversation. I'm not privy to this conversation. I mean, gosh, I handle the sticks and bricks. You handle the monies. As a realtor, I hear it on at the end. As a result of your very thorough conversation and confidential conversation, you can tell me as their realtor, you know, yea, verily, they can afford a home up to this amount, and then we work off of that. So
Mhm.
I think that's a great foundation to begin the home buying process.
Yeah, and I also go into like, what are they looking for? What do they want in what they're purchasing? But what do they have now that they want to bring forward? What don't they have now that they want to have in their purchase? So I get into that. And once we've had these conversations, I really find a lot of information out just from asking some probing questions. Then, of course, I have to get back to the basics and ask them about their where they live, name, address, social security number, where they work, how long they've worked there, do they have job gaps, have they ever had major credit issues. I try to be really, really thorough about all of these things because it's so important to know everything up front so that I can work up their options. So that's kind of the real starting point. It's an interview process. It's getting them to think a little bit deeper about what they're trying to accomplish, getting that goal really set firmly, and then me gathering that information. Once I've talked to them, then I send them to my web application and they literally fill in like all the little details of, and then it's a real simple app, probably takes 5 minutes, 10 minutes at the most, and you can upload securely and safely encrypted your documentation, W-2s, paycheck stubs, and bank statements. So that's just like the initial. So that's kind of like the real nuts and bolts of getting them started. But the most important part is that interview and really, really being able to understand them so that I can best serve them with loan options.
Right. And so before we get to the loan options, I did have one question about that, Laura, and that is, do you find that sometimes there's something in their credit that maybe is unknown to that buyer? Like someone in Kansas has the same name as them and now it hit their credit report. And do you find that that happens sometimes? And second question is a follow-up. When you do pull a credit, does it ding and lower their credit scores?
Well, I know I'll answer the second question first because people are very, very worried about the ding on their credit score. So the mortgage is the absolute highest. That's the pinnacle of a trade line that you can have on your credit report. There's no better thing to have on your credit report than a mortgage loan. So when a mortgage lender pulls your credit report, it's not going to really damage your credit report. It might be 3 points. It's not going to hurt your score, especially if you are in the upper area of, credit scores in the 700s, in the 800s. It is not going to damage your credit score. And in fact, they allow multiple mortgage companies to pull your credit report in the same time frame and only count it as one inquiry. And the kind of the rationale behind that is you might do a little bit of mortgage shopping and then you're only going to end up with one mortgage. But if you put in 5 applications for a credit card, you could get 5 credit cards. So that is 5 inquiries, but you're only going to get one mortgage. So it's really only one inquiry. So I advise people not to worry, not to have any concern. Don't even think about it. It's not going to damage your credit score to have a mortgage company pull credit. And if you don't have us pull credit, we can't give you good advice because we are basing information in an assumptive way. We're just guessing. And guessing is no good when you're talking about something as big and as important as your mortgage loan. So we want to actually see the credit report. We pull a full residential mortgage credit report, which is TransUnion, Equifax, and Experian. They merge together on one report. We use the middle number, and then we base everything, what loan options are available to you, how they're priced, how mortgage insurance is priced is based on the credit score. So it's very, very important element. So we need the real score and not just, something that was pulled. And one other note about that, because this is kind of a long topic, but a consumer credit score, the score that you pull on some app or your bank sends it to you, is not the same score. It will not be the same number as what we get as a residential mortgage credit score. And that's because the mathematical algorithm that's used on a residential mortgage credit score is different than a consumer credit score. So it's probably going to ride in general, maybe 30, 40 points lower. Sometimes not that much, but just in general, somewhere around there. So
Okay.
don't get upset when you hear that, because that's just across the board. That happens to everybody.
And sometimes you find in credit reports that sometimes there's identity theft, or somebody's name is on their credit report when it shouldn't be, and it's same name, different. Do you find that, or is that a rare occurrence?
I think mixing credit reports happens most when somebody is like a junior or the third or fourth. They have the same name as their dad. It happens to my husband all the time. He's a junior. So it does happen. When there's a fraud alert, then we have a procedure to handle that, to make sure that things are authenticated. And we just help the buyer with that. It's a process. It's just step by step, and we can handle that. If there's things on the credit report, once I have the credit report, I go over everything with the buyer. And if there's things that we can fix, I'm going to fix them, or I'm going to give them steps on how to fix it and coach them through that fixing process. And it's very important.
That coaching's very important, because if something was on my credit report that I had no idea what it was on, I would really rely on you, Laura, to say, okay, Michael, you have to write a letter, you have to say these words, you have to send it in, send it certified, whatever it takes. And then sometimes it will take a couple days, couple weeks, but that time to clean up a mistake or an error, or maybe something deep in the past, will put you in better standing and a better foundation as you go into the home buying process, right?
Absolutely. And just one little nugget right here is, if a consumer has paid something off, keep your receipt, keep it handy, make a folder in your file cabinet or in your, security box, and keep those receipts forever. Because credit gets sold to other collection companies, and they sell the credit to, and so it can pop back up under a different name, but it's the same one as 3 iterations ago. So you want to get those letters from the creditor, from the collection company, if you've paid something off. You need it in writing. You need to keep it. Same with bankruptcy papers, anything. If anybody's had a forbearance, foreclosure, bankruptcy, you want to keep those papers handy so you can reach them, know where they are, and be able to pull them out, because you'll probably need them again. It's annoying. I understand it's annoying, but you're going to need them again. So keep them handy. And don't let the collection company talk you out of getting a written notice that you've paid the account. You must make that a mandatory element of you paying it off.
Good advice there, Laura. So let me ask you, you've gone through your thorough questionnaire with them. They submit an application, you've done their credit report, and now you have all the data you need, nothing assumptive or anything. How do you determine the best type of loan for a home buyer?
Well, I look at my notes that I've taken when I was interviewing and talking to them. I look at their credit, their history, and I work up loan options for them. And I enter all of that data into an app that I have called Mortgage Coach. and it spreads out the each option side by side by side, and it compares each option. So then once I have everything ready, I set up a Zoom call with my client, and we get on Zoom just like you and I are here now, and I do a screen share and I go over the options with them. I can also do it in person. Been in this business a long time and I love meeting people. So in person or on Zoom, so that we can go over the options, and I can see, you can see the numbers. I'll explain them to you. I'll show you how the program works and compares. And it always happens that one option is just better than the others, and the numbers tell the story. And it's a beautiful app. So once I've gone over it with them, answered all their questions, addressed concerns, and we kind of know how we're going to move forward, I actually send that information to them by text. So it's on their phone, it's mobile. So when they're out shopping with you for their house, they can look down and go, oh, look at that. If I buy a $300,000 house, my expected payment is going to be right around here. So we can use that form a couple different ways, and it's great information. It's mobile, it's in the palm of their hand. Not literally 98% of the lenders out there do not do that, because only about 2% of the loan officers across the country are using that application or anything like it. So we're giving information that is just brilliant to show them what the numbers are, what the program is, what their costs are over the whole term of the loan. It's everything right in the palm of their hands. If we get a house and say they were looking at 300 and they're find something at 310, I can update the numbers and it hits what they're looking at immediately. It's live. So it's really awesome data.
Yeah, excellent. So I know we can spend a whole, and we will in the future, Laura, we'll talk about VA loans, FHA loans, conventional loans, things like that from your perspective and mine. But I'm curious to know something. So let's say they're pre-approved and I found them the house and we wrote an offer and it got accepted, it's now negotiated. What do you do with your underwriter between contract acceptance and the settlement? What happens during that time frame, 30, 45 days?
So I get the contract from you that's been signed, and the loan package goes from me to my assistant and then to my processor. And we order the appraisal, the title, we update any documents because maybe they've been looking for several months and their paycheck stubs are now 60 or 90 days old. I get them to update paychecks, some bank statements, and then we make sure the verification of employment is up to date because we do those things early. We might update that. And once everything is in there, I send the file to underwriting. The underwriter is the person that puts their John Hancock at the bottom on the approval. So I'm doing, it's like art and science, because I'm peeling away the layers of the onion, getting rid of any bruises or bumps, making the loan package look all pretty, so that when my processor sends that to underwriter, the underwriter's like, beautiful loan, don't have a whole lot of questions, loan approval, couple little conditions, maybe they have a question or they want one more paycheck stub or something like that. And so it goes through there. Then we have to get title work from the title company to make sure you have clean title to the property. And all goes well, we're going to settlement on that day that you put into the contract. So a lot of paperwork flies back and forth, a lot of conversations. We also have to lock the loan in. We can lock the loan as soon as they have a contract. And locking just means that you're securing that interest rate at whatever that particular price is. So we can do that. We'll have that conversation as soon as you get a contract. And but lots of paperwork.
Lots of paperwork, and you're kind of the go-between. You're still staying in contact with the home buyers, and you're kind of saying, okay, so the underwriter needs X, Y, and Z now, so please provide it, and you help the buyers through that. we've talked a lot about customer service too. So what is your system for post-closing? Staying in touch with buyers and keeping them up to date, maybe even talking to them about refinancing in the future if the interest rates go down.
Well, they definitely go into my database, and we send out important information to them about changes in the market. We have a link they can request, their market value of their house. We send them information, or I'm always available, because the great thing about Nations Lending is we service 98 point some number of our loan portfolio. So they never have to call an 800 number. They just call me, whatever question, when's my first payment due? I got a tax bill, what do I do with it? I'm changing home insurance companies, whatever. Those are the typical ones. And I just take care of it for them. So you're never talking
That's
to a stranger. Why talk to a stranger when you can talk to your friend?
that's
So
awesome,
you're
Laura.
calling me. We have a couple new plans to help home buyers. But information is key. When you have questions, if they want to update their house, I have a slew of contractors that I know, so I'm a great referral source. If they need to write a will, I have attorneys for that. If they want to start investing, we talk about that. So just being a trusted advisor to them, and then helping their friends, family members, coworkers, because you don't want to let them just wander the universe and trip across somebody who doesn't have their best interests. When this team, Mike and I, you want to send your friends and your family members and your coworkers to us, because you want them taken care of too. And
That's great, Laura. And so, in your experience, and also by way of conclusion today, in your experience, what advice would you give somebody who's watching this and thinking, okay, I think I'm ready to buy a house. Or maybe I should talk to Laura first before I talk to Michael. What advice can you give about what they can do to take their best step forward in getting pre-approved with you?
I say the best thing to do is sooner is better than later. Because if you have things that you need to work on, we'll have time to work on them. So don't wait until you're pressed because your lease is up, or you've got to get out of the basement apartment, or whatever happens in life. Just, even if you're not sure, just find out. It's just information. I'm not a high pressure person. I provide information, education, and communication. And from that, I earn your trust. I earn your business. I've had clients for 20 or 30 years. They always come back because they don't get this kind of personal service most places. So don't go to your bank just because you bank there. They don't care about you. You're just a number. Neither does your credit union. They're not trained. They're not licensed. I do training literally every day. Every day I train, I learn something new, I challenge myself, and I'm sharing that with everybody that talks to me. And you just want to get in, just gather information, whether you're going to do this a year from now, but look at the information now, because maybe you're ready. Maybe you can do it now and you don't have to wait a year. That would be fantastic news. But the sooner you get in, the sooner you start, the sooner you get results, and you'll be on your way. And then you'll think, oh, that wasn't so bad. I shouldn't have put it off. But just doing it now and having us look at your credit report, if there's something that needs addressed, we'll start addressing it. If your work history has been, maybe you've had 10 jobs in 3 years, maybe we need to talk about that. There's things, maybe you transfer your money all over and there's like spaghetti noodle plate of where your money's been going, and we need to calm that down and kind of make it not so chaotic, because you want to have clean bank statements. there's a whole lot of things that people do that in normal life, maybe it's okay, but in the mortgage world, we want to clean it up a little bit.
Yeah.
We need time to do that.
Yeah, we don't want any SpaghettiOs, do we?
No, because the underwriters ask about everything. And the most particular thing real quick right now is all of this stuff, Afterpay, Zelle, all the things, Cash App, all this money going this way and that way, and setting up installment loans when you're buying a consumer item on Amazon and you're breaking it up into 4 payments. We got to explain all that. So trying to like stop that for the months preceding so we can use those bank statements is a good idea.
Excellent. Excellent. Well, I think every viewer can see, Laura, that how professional you are and how thorough you are. It's only this confidential conversation, Laura, with you that is so important. It lays a foundation for future transactions, and it helps them with getting the best type of loan at the best price because of your thoroughness and your communication with them. Definitely viewers will see that. So thank you for everything, Laura. In the next couple of episodes, we'll talk about on the selling side. We'll talk about how we help sellers through the home selling process. So I thank you, Laura. This is always a pleasure, and look forward to seeing everyone next week.
Thank you, everybody. I hope this was great information. And remember, now is a great time to start. Just give Mike or I a call. We're here for you, and we will walk you, promise, through the whole process and never let go. So Laura Fournier signing off. Talk to you next week.
Bye-bye.